every time it hit this 1,000 level here, let's just draw something around that just to give you a little bit of a better view here. There's one time that it you know, it kind of bounced off that $1,000 point level. Here it broke through a little bit, but it still backed down after breaking through that $1,000 level. Here we hovered around it for quite a few months before it backed down again. But do you notice something here? Let's take a look. Let's see what you can notice. Right around here. And then again here, where it finally broke through. So what do you notice about all the times that it had hit that 1,000 point level? Well, it was a very narrow level. It was only one little uptick in the bar right here, a very little narrow wick at the top of this bar that sent prices much, much lower. It was a very, very narrow two little bars that sent the stock market lower. Now, some people would argue that perhaps it was the psychological level of hitting 1,000 that caused people to sell. And that's the reason for the decline. We did it, and we came up again against this type of resistance at the 1,000 level here. We sold off even stronger for a lower low here. The next time we got up to the 1,000 level, look at that, it kind of broke through. It broke through a little bit stronger than the last time, didn't it? I mean, this time it didn't even break through, but it seemed to shoot through there, and for a couple of months it was hopeful that it could have stayed above 1,000, but again it sold off, and it sold off even deeper than the last time. The next time it came up to the 1,000 level, we had 1, 2, 3, 4, 5, 6, 7, 8, almost 9 months of hovering right around that 1,000 price level. Now, do you think that it's more significant at this point than it was here or here or here? Yes, because we spent a lot more time in that area. People became more comfortable with the index at 1,000. All of a sudden, I think they feel like here maybe they didn't think it was possible that the index and stocks could actually break through 1,000. It's very psychological. When it came back up here and it sold off dramatically, then they said, well, gee, I don't think we're going to be able to break through this 1,000 level. When it came back up here, they said, yeah, we can push it higher. And they did for a little while, and then they sold off again. When they came back up to this level again, they actually spent 9 months out of this 1967 or 1976 to 1977 area hovering around this 1,000 level. People got comfortable with that level. The sell-off from that was much less dramatic. In other words, this was a turning point in the psychology of this market. It didn't sell off as much as this point or this point or this point. And it spent a lot more time at these levels. When it came back down, it consolidated a little bit, came back up, spent another 4 or 5 months here, sold off again, but again, you've got higher lows. Higher lows was an indication that the next time this tries to get through 1,000, it would just simply break right through. And it did. It broke right through. It came back to test it again, and that's one of the principles that we're going to talk about. But it did break through this psychological level of 1,000. No longer was resistance, it became support. And from then on, boy, the market just absolutely took off. Look at the exuberant run-up here. Have we seen this kind of run-up before? Yeah, we saw it a number of times. We saw it in 1929. We saw it in 1946. There's 29. There's 46. And from there, from 1983, when the market broke through, you could see that we had a tremendous run up all the way to mid 1987. And that's why we had an exuberant run up. And what happens every time we have an exuberant run up where we have these large price bars, going right to the sky? Well, some people say it's too high. Psychologically, they couldn't take that kind of height. And prices sold off dramatically. This is probably the first time since 1929 that prices sold off so dramatically in a single day. And in fact, well, this is actually a monthly chart. Let's go to a daily chart. And I'll show you exactly what those days look like during that month. I have to go to 1987. Here we go. Right in here. We had a fairly significant run up in prices. Very, very strong prices running up to this level. We started selling off, came back up again, and then boom, it just fell apart. On the monthly chart, it doesn't look that bad. It looks like, just one big long bar down. But the fact is, this happened over a period of a month, and it was a pretty dramatic sell-off. It was a very scary time. This is when I started trading. Let's go back to the daily again. This time right here was very, very interesting, actually. I started trading right around February, the beginning of 1987, in January and February. And you can see in January, February, March, and even April, prices did nothing but continually to run up. And I was making $1,000, $1,200 a week during this time, and I thought I could do no wrong. And I knew prices were going to start pulling back, and I actually started buying some puts at these levels. And I made $32,000 over the next couple of weeks in this period, and it was tremendous. I had a feeling, because of the exuberance of this run-up, that the prices were going to fall dramatically, and they did. Except down here at the bottom, I also thought they were going to continue to go lower, and they didn't. And over the course of the next couple of months, prices continued to forge higher and higher and higher, and I lost quite a bit of money during that time. That was my first introduction to losing money in the markets. Well, if I had been right here, in this area instead of this area, I would be a multi-millionaire back in 1987. And in fact, there was a lot of people who purchased puts in this area, a couple of market makers in particular, that did make millions during this period right here. But once again, even though prices sold off dramatically, look what happened. Prices begin to stabilize. They stabilize. They move up and down. They go up and down. And eventually, what happened? Well, we had some resistance right in here, didn't we? Another psychological level right around 2,800. Let's draw a little price level there. And let's go back to our monthly chart because it's a little bit easier to see the detail here. So what happened? We hit this resistance level right around 2,750, and let's go back to our drawing tools, to our oval. We touched it here and it sold off. All of a sudden the psychology changed, because the next time we came up against this resistance level, we even though we did sell off a little bit, the sell-off wasn't very strong, and we actually hovered in this area 1, 2, 3, 4, 5, 6, 7, 8 months without a dramatic sell-off.